Welcome to the Sand to Pearls Stock Market Commentary for market week ending Friday, March 21st, 2014. Market breadth. With this past week's market advance, our bull-bear point and figure ratio rose from 1.66 to 1.79, advancing slightly further into bullish territory. The total count of securities in bullish or bearish patterns fell 2% to 2,108. The count of bearish stocks decreased 6%, while the count of stocks in bullish patterns increased 1%. The Sand to Pearls P&F Market Breadth Summary chart shows us a market now 6 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 26 points for the 17th decline in 32 weeks. At a positive 353.77 points, it continues below the September 2012 high, the October 2013 high, the January 2014 high, and above the April 2011 and November 2011 highs. It continues below 7 of the 9 tops above plus 100 and above all 6 bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 0 accumulation days and 6 distribution days. Of the other indexes, both the S&P 500 Deposit Receipts and the Diamonds Trust ended in distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 also ended in distribution mode. Momentum. Last week's strong downward move of the CCI 20 only completed 3 consecutive days before rising back above zero. At minus 37.74, the CCI 20 now has only 1 consecutive day below zero and is inside the plus or minus 50 range for a valid zero-line reject entry signal if the CCI 20 moves upward Monday 3/24. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 57 weeks ago, while the daily CCI 20 began a Woody's uptrend 4 weeks ago. The CCI 20 weekly continued above plus 100, very slightly upward from last week. We will continue to follow this trade simulation in next week's commentary. Industry rotation, the last 2 weeks, all of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish banks continues in the top 5. Disk drives has left the bottom 5 and entered and leads the top 5. Computer hardware has entered the top 5. Gold and silver has left the top 5. Bearish, networkers continues in the bottom 5. S&P retail has entered the bottom 5. Oil services has left the bottom 5. Focus this week: how China imported a record $70 billion in physical gold without sending the price of gold soaring, from zerohedge.com. Curious how China imported a record amount of physical gold in 2013 without, in the process, sending the price of gold to new record highs? The article explains the answer, as does the chart that is included in the article. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary. We hope that you are having a fabulous weekend, some nice weather maybe, that you have a great week coming up, and we wish you true success.